Well, it's not something we like to think about, but it's important for your family's financial well-being once you're gone. Here to talk about the importance of life insurance and the different types that are offered is managing partner of OWRS firm with Kyle Winkfield joining us this morning. And thank you so much for being with us this morning.
Hey, Shelly, I'm glad to be here.
He says it's something people can kind of have a difficult time talking about, thinking about getting, but you said we should be getting this at what age?
Well, I think the first thing is whether you're a hopeless romantic or hopelessly lost for words, life insurance is the ultimate love letter. I mean, it's the only financial product you can own that what you want to happen will happen even when you're not here. So I think the first thing to think about is what age? Well, think about where you are in terms of your needs. And I like to look at life insurance like buying a house or renting an apartment. You have two categories. You have term insurance and then you have permanent insurance. Term insurance, let's start there. Term insurance is 100% about the coverage. Just like when you rent an apartment, you just need a roof over your head. You're not looking to expand. You just need coverage only. So that's the beginning point.
That's the one probably most people are familiar with?
Correct. That's the one most people are familiar with. The term, it covers you for a specific term, 5 years, 10 years, 15 years, 20 or 30. And then after that term, the insurance is expired, so then you have a choice to re-up. Just like when your lease comes to the end, you can re-up or you can move.
Okay, and then the permanent insurance, that is what you were explaining. Give me a little bit of overview, and I have a lot to learn from this one, so I'm very interested in what you're saying here.
So permanent insurance, think of like buying a house. When you buy a house and you pay the mortgage, a portion of your mortgage payment goes to pay down the principal, and the difference between what you owe and what the house is worth is an equity position. Correct. So now, if you buy permanent insurance, it's the two categories are whole life and universal life. As you pay that premium every month for the coverage, a portion goes to secure the coverage, and another portion goes to build up what they call cash value, which is the equity equivalent like in your house. So over time, that cash value earns interest.
And you said that you think of life insurance as being around after you're gone, but some of this you can benefit from yourself.
Yeah, I always tell people, think about the name life insurance, think living benefits. So if you have permanent insurance and you design it correctly, fund it correctly, and use it correctly, that cash value account grows, grows, and grows over time. And then let's say you get out there and you need to pay for college for your kids. You've got a nice pot of money you can pull from, or maybe you get out into retirement, and if you do it correctly, you can pull money out of that policy through policy loans, and that is essentially tax-free. So it becomes a very powerful tool, almost like the Swiss Army knife of retirement products.
I know, and I'm sure we're only scratching the surface here in the brief amount of time that we have. But you said if you want to learn more, talk to your financial planner about this.
Correct. You can talk to your financial planner if you're looking just to secure coverage. Believe it or not, if you've got renter's policy or you have homeowner's insurance, the person who helped you secure that, they can help you secure some term insurance. If you want to go deep dive and get some advanced insurance like permanent life insurance, then talk to a financial planner or someone who is well-versed in life insurance, and they can help you from that point forward. Determine your need, determine what you want to use it for.
All right, Kyle Winkfield, thanks for explaining this with us. Thank you.
Hey, I love it.